Hello, my name is Susanna Byler, and I'm a manager on the tax team at Kirkering Barberio. With the passing of the One Big Beautiful Bill Act, which you might hear us refer to as OB3A, tax changes are on the horizon and in some cases retroactive to the beginning of 2025. The One Big Beautiful Bill Act includes both extensions of existing tax provisions as well as completely new provisions. Today, we're going to look at the deduction for overtime compensation, including which taxpayers may qualify to take the deduction, the maximum allowed, and what compensation is included for purposes of this deduction. This is a temporary tax provision, so we'll also talk about which years the deduction may be claimed. And this is an evolving topic. We expect further guidance from the IRS. And so as we know more, we'll continue to update you. But if you have any questions, feel free to reach out to me. And now I'd like to introduce my colleague, Natalie, to talk to you about the specifics of this provision.
Hello, my name is Natalie Jaskolski, and I'm a senior tax accountant at Kirkering Barberio. And today I'll be discussing the no tax on overtime provision from, as Sue said, the One Big Beautiful Bill Act. Now, we know that the bill has been passed and signed. However, we do expect that the IRS will be providing us with additional guidance and to clarify the specifics for the bill over the next few months. So, no tax on overtime. What does this entail? It allows those who qualify to take the deduction of up to $12,500 if they're single, or $25,000 if they're married filing jointly of their qualified overtime compensation. Now, this phases out if your modified adjusted gross income is over $150,000 if you're single, or $300,000 if you're married filing jointly. And for every $1,000 of that modified adjusted gross income above these thresholds, the deduction is reduced by $100 until it's fully phased out. And if you're wondering or worried whether you're in that phase out range, or if you have just any questions, please reach out to Sue Byler and she'll definitely be able to guide you in the right direction. And also, if you are married, you must file married filing jointly to take this deduction. If you are married filing separately, that unfortunately does not qualify. Now, this is a temporary deduction, as Sue just said, and this will be from 2025 to 2028, which is going to be retroactive. So, even though the bill was signed on the 4th of July, the deduction is for overtime earned from January 1st, 2025. A question that we're hearing a lot from our clients is, I work overtime. Do I qualify? So let's talk about the qualifications of this provision. And one of the most important things is to actually define what is qualified overtime compensation. The bill defines it as overtime compensation paid to an individual required under Section 7 of the FLSA of 1938 that is in excess of the employee's regular rate. Okay, what does that mean? In layman's terms, it means if you are a non-exempt employee and you work over 40 hours a week, the half portion of your overtime pay qualifies for the deduction. If your employer pays you more than the time and half, for example, double pay of your regular rate, only the half portion is qualified for the deduction. To break it down by numbers, because that usually helps to understand it. Let's say someone's regular rate is $20 an hour. Yeah. If they work 1 hour overtime at time and half, that would be $30 an hour. And $10 of that pay would qualify for the overtime deduction. If, in another scenario, they work 1 hour overtime at twice the regular rate, double pay, which in this case would be $40, still only $10 would qualify for the overtime deduction, since that is the half required under the FLSA. Also, both employees and non-employees can take this deduction, whether you receive a W-2 or an applicable 1099. So that would be an NEC, a miscellaneous, K, then that's fine, that qualifies. You must also have a valid social security number. Also, you are not required to itemize to take this deduction. You can take itemized or standard deduction, and that won't affect your eligibility. Lastly, I think it's important to highlight how the taxes work with this provision. If you meet the qualifications that we just spoke about for your overtime, you are still going to be paying Social Security and Medicare taxes on your overtime compensation. You can't get out of that. You are also going to be paying state income taxes unless your state conforms to the Internal Revenue Code or specifically chooses to adopt the overtime deduction. However, when you file your tax return, you get to deduct your overtime wages from your income before calculating the federal income tax. So it's not totally tax-free. You just don't pay federal income tax on that deductible portion of overtime. If you have any questions around qualified overtime income, please contact your Kirkering-Barberio representative or Sue Byler. You can also visit our website for a full list of resources related to the One Big Beautiful Bill at heybgrp.com. Thank you.